The last weekly candle's high or low is all you need to worry about. I consistently pull five figures out of prop firms, literally trading to and from the previous week's high or low. Many of my students do also. Today I'm going to change the way you trade and approach this. Let's not waste any time and get started here. So what do I mean by all of this? First of all, we are looking at the previous weekly candle. Now that is important. We are looking at the specifics of the previous week candle. We're looking at the previous week high and the previous week low. So around previous week's highs and lows, there was lots of resting liquidity here. There was lots of resting liquidity because these are key levels. When we take out one side, usually if we are on side with the bullish direction in the market, we'll take out the other side as well. So let's say we are bullish here, which we have been. We traded down below a key low, so sell side liquidity was engaged here. Okay, now we use the previous weekly lows to look for buys. Because why? Once we are below an old low and clearly bullish, if we go below the previous week low, we have now engaged sellers. So retail are seeing this as a breakout. Lots of people are selling below this low here. So 9th of September, that weekly candle, once we engage the sell side below here, people are selling. We then use weekly profiles to get on side with the buyers. So you would drop down time frame, and as you can see, this is our key sell side liquidity. Engaged over here. We then have Friday's low engaged here with Monday's candle. Monday's candle then closes inside Friday's candle. Now we use weekly profiles. This, because we've engaged sell side over here and taken out previous weekly and previous daily low closed inside of that candle, we can now predict that Monday low of the week is intact. Any rally from the open of the next candles, any rally down is a Judas swing, and we would be buying that. Okay, all from the framework of we're in a discount inside of a discount, because sellers are engaged below this low and they're engaged below the previous weekly low. Okay, so when we are looking for buys, so throughout all of these weeks, as soon as we engage this sell side liquidity below here, we are now looking for buys, right? So from here up to here is 1,000 pips, but that's not the part I want to focus on. That's full weekly candles. We are looking for the previous week low to get engaged because we have to trick sellers into the market first. So the previous weekly low gets engaged here. Remember, you are now waiting for the previous weekly low to get engaged. You would be waiting for this to get engaged, but because it's a key swing low, this weekly candle doesn't actually trade below here. So you would wait, you would skip this week, and that may be hard for some of you, but sometimes you need to skip a week. You would wait for then this previous weekly low to get engaged. Look what happens here. We open up, we trade below it, which is doing what? Engaging sellers. It also trades into where? This key level, which is our bullish order block. Why is this a bullish order block? Because this candle closed above this candle's high. Really, it would still be valid if we closed above this candle's body, but the high makes it even more high probability. So anytime we're inside this grey box on your screen, we are inside of a weekly order block, and you have to keep that in mind. A weekly order block, why is this one important? Because it was birthed inside of a sell side liquidity pool. So we are oversold. We birth a weekly order block inside of a sell side liquidity pool, which is this line here. We then, anytime we rally back down into it, are now inside of that weekly order block, and you have that in mind. We trade below the previous week low, which means sellers are engaged into this order block. Now look, use weekly profiles to get on side. Previous week low is this. It gets engaged here. We also trade below sell side liquidity into down close candle, which now, because we are bullish, should support price to go higher. And look what happens. We close inside, and then we rally, retrace, and rally again. All of this is the logic. Monday low of the week. Why? Because of that logic I framed just then, where on the weekly chart, we opened up, rallied lower below the previous week low, and now we target the previous week high because we are bullish. So the previous week high rests here. Anything from here up to here is a buy. And obviously because we're bullish and reaching for a higher time frame objective, being this, I think we do still engage this. For any of you who do trade this pair, I think this gets engaged. This is our higher time frame objective. But up until here, you can be buying, and then we rally down. Why is this high worked as support and resistance? Because it overlaps with an order block. Okay, this order block gets engaged, not an order block, sorry. My apologies, a fair value gap. So this fair value gap overlaps with the wick of this. This is a bit advanced, you don't really need to know this, but it is in front of me and I may as well explain it while I'm here. But support and resistance works when a fair value gap overlaps with a high previously broken. So anyway, you would be engaging all throughout here. Why? Because we have engaged sell side liquidity below the previous week low, and we did so over here as well. We rallied lower, taken out sell side over here too. This candle wicks below the low and closes inside of this area. So it closes back inside the candle. We then rally, retracement, and those are easy buys. If you drop time frame, all of this in here, any down close candle would be a buy. So let's say we did drop. Remember, this is all from one previous week low to previous week high. Previous week high, previous week low. Gets engaged. Any down close candle created at a key time, important, down close candles created at a key time should hold now, okay? Hold price to go higher. Look at this. Okay, why is this order block engaged? Price is actually referring to this order block. Some of you would call this the order block, but price rallies from this order block. Why? Because this was created at a key time, when 10 a.m. So down close candles created at key time support price to go higher. Look what happens here. When do we engage? 10 a.m., right? So we engage the order block at 10 a.m. again. So this down close candle, once traded above and closed above, should support price. As you can see, it does. Every time we bounce into it, it rallies. Price rallies. And then, okay, why does this hold? 2:30 a.m. Now, I want you to go into your own charts and journal this. The order blocks created at key times once we're on side with the market. And what do I mean by key times really quick? Kill zones. So the order blocks created during kill zones are the important ones. Lots of people on Twitter and on YouTube just tell you any down close candle is an order block, which isn't true. These order blocks are created at key times. Otherwise, you're just pattern trading. And we don't pattern trade. We trade with logic, or else we're no different to retail traders. And this isn't to hate on retail traders. This is just to make you realize a lot of you are retail traders because you're trading random down close candles. The down close candles that matter are the ones created during kill zones. 10 a.m., okay? The end of New York. And it holds twice. Rally down into it, rally down into it. Then 10 a.m. again, the end of New York. This holds again. Why does this one hold as well? Because it's created during London kill zone. So all the down close candles that are created during kill zones hold once we're on side with the weekly candle. So once you figure out where the weekly candle is reaching for, where it is going, now you can easily get on side with it, because any down close candle created during a kill zone should now hold, and obviously reverse what I just said for bearishness. And don't forget, guys, this all came from the logic of, okay, we're below sell side liquidity, so naturally we're in a discount because we're below an old low. We then rally below a previous week low. So now we are definitely in a double discount. I call this a double discount. We do it again here, and this, look at this expansion. Then we should expand higher. Why? Because on the daily chart, you can see there is a higher time frame target here. There's resting liquidity, which we now have engaged, but also yen futures is bearish and should trade into its gap lower. So USD is also bullish, so it should trade into this fair value gap here. Okay, all from the logic of the weekly candle. How about we head over to DXY and I'll show you the same thing on this. It all happens all the time. All you've got to do is run below a previous week low, close inside it, and the next candle should expand. So let's look at this. There's probably an SMT there with the bond market, but we are below old lows. So below an old low, we engage price there. We engage sellers below this low. Okay, so we're in a discount, inside of a discount. We then, remember, drop time frame. And now, this is the previous week low. We engage sellers below here and rally. Look at the rallies. There's not much pullbacks. Why is there not many pullbacks? Because we've engaged enough sellers now. When we run below an old low, so a low, let's say on the daily chart back here, like we did, okay, ran below this low. Once we run below an old low and now a previous week low or daily low, you can fractalize this, okay? But that's for you to do in your own time. Once we do that, those two things, we are now set for expansion. There shouldn't be many pullbacks. And the pullbacks there will be into key order blocks created at key times, okay? So remember, these down close candles created at key times are the ones you want to be buying or selling, of course. Look when this down close candle is created. Why does this one hold? Now remember, this is the previous week low. So previous week low down here, we engage sellers. Why does this down close candle hold? Look at the time at the bottom of my screen, time before price. This is what people mean when they say time before price. It's just they don't understand it properly. This digs into the previous week low at a key time, the heart of New York session, 8:45. So close to 9 a.m. we do that. We then send it higher with speed, okay? Look how quick that is. I like that. Once we rally back down into it, I am buying inside here. I'm buying these lows. We then break higher, mitigate the fair value gap, break higher, mitigate the fair value gap, and rally, okay? Now, any down close candles at key times should hold price. Here, holds price, okay? Let's look for 3 a.m. There we go. 3 a.m., the heart of London kill zone, holds price, okay? Do you see how the order blocks at key times? This here is all time distortion. So all of this, okay, let me make it a different color so it stands out. All of this is time distortion because it's not key time. So whenever we have price action in between kill zones, so let's say 12-ish till about 1:45. Okay, this is not a key time for the dollar because no one's awake, no one's working during this time. This is all time distortion. So you would really not even look at this price action. Anything inside here is irrelevant. Anything created inside kill zones is important. This is what everyone gets wrong about time before price. Everything inside here is irrelevant. We are only looking at key times for the pair you're trading. So, for example, 8 p.m., remember this is New York time, 8 p.m. till about 10 p.m. would be important on Asian pairs. The US dollar is obviously not an Asian pair. Okay, so this is all time distortion. But back to the weekly candle, this all came from us engaging the previous week low inside of a key level. The key level being this swing low that we engaged here. Previous week low gets raided, closed inside of it, the next candle expands. Okay, so with this logic, you can pass funded accounts. You can get payouts just like I and my students do. That brings us to the end of the video. If you did enjoy, please do drop a like and drop a comment with some feedback. If you do want to become a student and follow along with what I do weekly, what pairs I look at, and how exactly I engage the market, check out the WAP link in the top of my description. The first line in my description is my mentorship, okay? So if you do want to join my mentorship and become my student, now is the time. Spots are filling up quickly, but I still take on new members whenever I can. With that being said, please do drop a like and subscribe if you are new. Turn on post notifications so you don't miss a video. And thank you as always for watching, and we'll catch you guys in the next one.